What's up, guys? Jack Kellogg here. Just wanted to come on today to talk about my trades today. I traded QQQQQQQ for $7 billion. And I lost $100 on VVOS while everyone else got blown up.
Trading really isn't for you guys. I'll be straight up. I'm taking the next month off. You probably, if I can't make money, you really think you're gonna make money? All right, here's Kyle for another webinar.
That was perfect. Hey, what's going on, guys? Jack Kellogg here. I got the holiday sweater on. It is Christmas time. It's December 2nd, and really not that many trading days left. The first 6 weeks of the year, I was able to really trade at my best and only have a few red days in January and the first couple weeks of February. But after that transition to late February, everything started to get a lot choppier and a lot more of ups and downs. Make some money, lose some money, make some money, lose some money. I had a huge problem this year with being conservative at the beginning of the month, so not really allowing myself to take any significant losses at the beginning of the months and cutting my losses super quick if anything were to go against me. And my problem was after I found that 70K win or $80,000 win, I would just lose it all. The last day of the month, I ruined my months. I think it was like maybe 3 or 4 times this year. So a lot of it had to do with just complacency and comfortability of, okay, I'm up money, so let me kind of roll the dice on this one, or let me try to double my month, which is something that I do good as a trader. When things are working, I'm able to risk more, be a little bit more lenient, get out of certain situations, okay, because I know in the back of my head that I'm up on the month, so worst case, I'm just gonna start back flat. This year, it was so key to keep those losses at a minimum no matter what, and just rely on that 1 or 2 days per month that you're able to make one day in January. Whereas January, it was so fluid for me, and maybe I got out of a few situations that I don't quite remember in January. I think there was a couple times where I was down a bit, but since I was up so much on the month, it's like, oh, I'm down 15% of my month. Let me just kind of hold and wait for break even or whatever it is. That's what I did good. That's what I did bad. Been taking some time off now just to think about 2024. Have barely traded this month. It is a red month for me. I have like 0 wins. If I'm continuing to see that in my trading, I just been sizing down using smaller position sizes, but I need to go down even further, because it's almost like you just need to keep playing the game and stop trading as much and use really small position sizes if you're gonna trade. And I also did a very in-depth recap of 2019, 2020, 2021, 2022, and this year. So I recapped all 5 years. And one thing that I really realized for me, and also the other Clover guys, I'm not sure if they've really realized this, but if you take out all my OTC gains, you take out all my GME gains, you take out all my AMC gains, you take out all my BBY gains, that's a very, very significant portion of my total profits. And that's where I have that edge that is just my percentage to win, and my risk to reward factor is astronomically better than my small cap edge. As my edge decreases, I still have edge in the market. Like, I'm still making a little bit of money, but since the edge is so minimal, I shouldn't be risking or trading big size on that edge. And that's something that I've been working on and slowly sizing down this year. During the hot period where my edge was a lot more significant, you're slowly sizing up and trading more and more, and it was the same exact process this year as sizing down. Like, I couldn't just go from wanting to risk 50,000 on this trade to, oh, I'll just risk 300 bucks. Like, that's not how it goes. Like, I've had to slowly just now come down the risk scale and start to level out kind of at the bottom right now. The trade that comes into my mind that was a great trade for me this year was the OTC symbol VENG, which was a high-priced OTC pump trading a lot of volume. I was happy with this trade because it was one that I felt I had a significant edge on, and it was different from the usual OTC pumps. Like, a lot of OTC pumps start at $1 and they go to 6 or 7, and they're trading, let's say, 100,000, 200,000 shares a day. This pump was starting at 5 and traded all the way up to 25, and it's trading still 2, 3, 400,000 shares a day. If you think about it, shorting 20,000 shares slowly throughout its pump, kind of shorting into the $20 area, you're able to get a $400,000 position size. It's still going to to end the same way that all the OTC pumps end. But to get a $400,000 position size on a $5 stock, you're gonna have to be shorting 100,000 shares. And like I said, if it's trading 200,000 or 300,000 shares, it's impossible. You don't wanna be a third of the daily volume. For me, that was a great trade because it's something that I'm familiar with, and it didn't have the fat tail risk with that type of position size that almost any other OTC pump would have. So now on the other hand, let's talk about my worst losses of the year, the biggest lessons, and what I've learned. So,
ever dreamed of trading like one of the Clovers? Well, it all starts with the right broker. Clover Trading and Centerpoint Securities have teamed up to supercharge your trading experience. By joining Unlock the Power of CP Edge exclusively with Centerpoint. We're talking top-tier trading tools worth over $6,000, all at your fingertips. Get ahead with real-time scanners, cutting-edge news, and a tailor-made trading journal. Experience trading like never before with superior short inventory, personalized support, and interest on your idle funds. Plus, you can get competitive pricing that fits your trading style. Ready to elevate your trading game? Click the Clover Trading link in the description below to get exclusive deals with Centerpoint Securities. Now let's get back to the content.
As I was mentioning from the previous video, if you guys want to check that out, reviewing my year, I went through and I realized, like, why was I being so up and down in my trading? Like, why was I losing so much? I really boiled it down to a few different mistakes that I was making consistently. The first mistake that I was making was low floats, right? And the small caps. And what was tough about the small caps is you never really know, like, is this a fake out or is this actually gonna end up doing what I think? Unfortunately, you want to continue to try it because you don't know what really to trust. And that's what I was explaining the difference in the other video. Basically, one of my biggest lessons this year was trading these things. Even if I had a 65, 70% win rate, if I got one ticker that didn't work out, it would end up wiping away so many gains, because if you try it 3 or 4 times and you're losing, it's slowly like kind of sizing up after you take the loss because you think the odds are getting better, but they're really not. And you just continue to take 4 or 5 losses on a low float ticker. So one of the rules that I implemented was not being allowed to trade a low float more than 2 to 3 times, especially if you start to get down like 10 to 15, 20,000, because then it can just snowball to 50 or 70 like this, right? And then that's losing a significant amount of my good trade. Make 70, lose 70, and you break even, right? So another lesson that I learned was just using too much capital on mid-cap stocks that weren't acting like penny stocks. So we had AI this year, we had Carvana, and these were the mid-cap stocks that were kind of like penny stocks, but they weren't really, like, they weren't going truly supernova, increasing hundreds of % per day, like a small cap. They were just increasing 15, 20%. Then I was trying to size up on those tickers, and unfortunately, they just weren't doing what I wanted. I need to be seeing this stuff happen throughout days, and that's why I've eliminated having a lot of money in my account, so therefore I can't trade these because my position size won't allow me if my accounts are small. That's the rule I put in place, and that was the disaster that happened on Carvana and AI for me. For the low floats, it was BDTX, it was TENX, it was the low floats just were terrible. Obviously, a lesson that I had to relearn this year was the Chinese pumps. Top was terrible, other pumps are terrible. I took the loss on top and I just decided to avoid all Chinese pumps after that because I just realized no amount of money is worth the stress on those things. The last lesson that I learned is I can't be buying stocks for gap ups with no history, right? Just because a stock is fitting my criteria in the intraday price action, so it has like a nice spike, whatever, huge volume, a lot of hype, a lot of longs are very excited about it, it's closing good, it's not closing too overextended. If the stock doesn't have history of showing gap ups that when it gets similar volume and it gets similar price movement and then gaps up the next day and runs, then I can't trade it even if the intraday works out. And I took a lot of losses on that pattern. CNXA was one that I can remember, LYLT, and a lot of these stocks are obviously cheap and I like trading the cheap ones more, but these stocks are cheap for a reason because they're likely headed to bankruptcy soon. The whole lesson of this is avoiding tickers that A, you don't know if the risk level is going to hold or not hold, and B, making sure that the volume and the ability to get out of the stock is there. A lot of key things that I think I'm doing that are going to help me for my future trading and future of anything in life, right, that I'm starting to fail at miserably, is you just need to step back and review everything, right? Where did everything go wrong? I'm a big advocate on tracking everything and then having that data just to stare at. Let's say you're having trouble with a relationship, and if you tracked every single fight or every single disagreement or whatever it is on a spreadsheet, you'd probably start to see like a pattern, like a progression pattern of how it happens every single time, right? It's the same thing with trading, right? That's why I'm tracking all my trades. I'm tracking the strategy. I'm tracking like how did I sleep the night before? All these like little minute details where you have to look at everything that's going on. If I were to go back in time in 2024, and that would be my first year of trading, I would definitely be tracking a lot of data and trying to find the patterns and the edge, and just kind of understand that I'm probably not going to find a significant edge if a lot of traders are struggling now compared to what happened in 2020 and 2021. Just know that my edge isn't going to be as good, most likely, based on the market until something is proven otherwise. So just be using small risk and using this time to learn and understand that it's only in human nature for another bubble, another crazy market to come. Really just be working towards that eventual exponential growth phase, just focused on small, consistent growth, and be aware that if a bubble does come, like that's the time to go after it. We are going into an election year and maybe something will get super hot. AI, we saw bits and pieces of it this year, but nothing truly amazing, and just waiting for that phase to go exponential while showing up every day, tracking the data, growing small and consistently, and waiting for that time to get after it. At the beginning of my journey, it was just only focusing on trading, and now that I feel like I'm playing catch up in like a lot of other avenues in finance, right? I'm playing catch up, trying to learn a whole bunch of different ways to make money. So I think that it's important to be aware of other trading strategies and not just penny stocks. There's so much money being moved and made in the market. Like I never realized like you have the potential to make and lose pretty much your entire net worth in every single day, depending on what type of position size you take with what type of leverage. And obviously like don't do that. Don't never go all in, but that made me realize how much opportunity there is in all different types of markets. And there's just endless strategies. There's thousands of different strategies. And then also there's also different ways to make money, and it doesn't have to just be day trading and short-term gains. It can be in penny stocks. It can be all different types of different assets that you can invest in or whatever it is. So it's been a very eye-opening year for me for that. And I think that people should also take that in consideration and don't just think that it has to only be penny stocks, because then you might force a bad trade, force trying to make millions of dollars, maybe when it's just not there. There's always still potential to make a great income, great living. A lot easier to make $200, $300, $400, $500 a day in small caps than try to make $50K a day, because it's just crazy volume and liquidity is just not the same. And you significantly decrease your odds as you trade bigger and bigger, because it's harder to fill your position sizes and get out exactly where you want. So just go in with the right mindset.